Hello friends. So welcome to my YouTube channel, and this time I came up with the virtual digital assets and the provision of taxation in the finance budget. So friends, this time they have introduced one section and where they have made a virtual digital assets as taxable whenever you do a transfer or a sale, and they have defined under section 247A that the virtual digital asset shall mean any information or code or number or token generated through cryptographic means or non-fungible token, etc. So, and this amendment will take effect from assessment year 2023-24. So let us look at, friends, about the taxability of this particular assets, the transfers, and whether we can claim any expenses or whether the loss under this particular thing we can claim or take a set off or carry forward for the next year or the further years. So let us look at the provision one by one. So friends, budget proposal 2022 brought or they are proposed virtual digital assets as taxability, and the provisions are there are certain definitions which we will look into the definitions under section 247A. Then we will go through the section 115BBH, which is introduced in this particular budget, and they have proposed a certain thing in this particular section. Then we have a deduction of expenses, set off of losses, gifting of virtual digital assets, and TDS on payment for the transfer of the virtual digital assets, which is also a new section under section 194S. So friends, this particular thing, like the finance bill has defined virtual digital assets in the newly inserted clause 247A, that is under section 2 and subsection 47A. It says that regardless of the nomenclature or users or any kind of the nomenclature, the VDA has been defined to mean any information or code, or number or token generated through cryptographic means or otherwise. So they have not only covered the particularly that particular cryptocurrency or Bitcoin or any other coin. They have covered everything whatever you have formed as an assets under the particular named as a virtual digital assets. So if you look at the provisions, section 115BBH says that it is proposed to introduce this section to provide for the income tax on the transfer of any digital assets. Section provides that the tax rate will be 30%. It is also informed that the question of whether it is legal or not legal is a separate issue. Tax department is concerned with only the taxability and not the legality of the particular assets. So they said that we are, irrespective of whether it is a legal tender or not, we will charge your tax whenever you are transferring this particular assets. So what is the tax proposal in detail? So there are 5 major changes and one about the TDS, so that we will see. First of all, it is proposed to be taxed at the rate of 30% under section 115BBH. Second is no deduction in respect of any expenditure. They have very well clarified that no deduction in respect of any expenditure other than cost of acquisition or allowance or set off of any losses shall be allowed to the assessee under any provision of the act. So they are very clear that no expenses except the cost of acquisition will be allowed. No set off. Further, they clarified that no set off of any loss arising from transfer of virtual digital assets shall be allowed against any income computed under any other provision of that. They are very clear that they don't want to allow setup of the losses for any other expenses or any other expenditure ahead or any other heads of income. And such loss shall not be allowed to be carried forward to the subsequent year. So even in these losses, if you are not able to set up this year, they are not even allowing to be set up in the next year also. Coming to the next amendment is Next addition is the gifting of the virtual digital assets would be taxable as the income from other sources under section 56(2) Roman 10 in the hands of the recipient. So whenever there is a gift of virtual digital assets, it will be taxable in the hands of the recipient under section 56(2) tax. And to curb the, to track the transaction of the digital assets and the transfer, because it is not easy to track. So they have provided section 194 as by which it will be tracked based on the TDS deduction. So whosoever is transferring the TDS, this virtual digital assets, the payer will be deducting the TDS at the rate of the 1% of the such sum. So that section says that the new section is introduced 194S to provide for deduction of tax on payment for transfer of VDA to a resident at the rate of 1% of such sum. So this is covered under the virtual digital assets TDS provision. So friends, this is it for the virtual digital assets. Keep learning, grow yourself, because the sky is the beginning and there is no limit. So thank you, friends, and this is what I have prepared based on the certain information taken from certain presentations, certain videos of the authors, and taken care of, taking everything together in a very minute level. But whenever you are taking certain action, you take professional advice. So this is what the disclaimer is. Thank you very much, friends, and stay tuned for the next video soon. I will upload for each proposal that they have taken into the proposed budget. We take separate video for each separate provisions they have proposed. Thank you very much.